Welcome back. Here with us on Editors Roundtable. Another hallmark of this week was the mutual fund data. And guess what? We finally have some good news coming in June because net equity inflows improved. Most fund categories on the equity side got decent flows. I mean, look at flexi cap funds. Month-on-month increase, 49%, large cap, mid cap, I mean, increases between 20% to 30%. All the categories got better flows. And people still love their small cap funds because that's where the net inflows were, in excess of 4,000 crores. The other solid story is the SIP book. It's very strong for mutual funds. So 27,000 crores flowing in systematic investment plans, an all-time high. But the one point I want to make is that we should also look at now perhaps equity flows from the perspective of how much money is coming in arbitrage funds, in balanced funds, even in multi-asset allocation funds, because these funds are drawing very big money and a chunk of that money is eventually going to equities. Sample this, net equity inflows for this month are around 23,500 plus. Net hybrid fund inflows are again 23,200. So net. So hybrid is a big category and a lot of that is also flowing into equities. So that's the simple point. Now, with that, Mahesh, I want to ask you, we had some notes this week as well on AMC stocks. Tell us what you think here. And in general, capital market plays, because some of them, like exchange stocks, etc., they've run big time. There's also regulatory change overhang, etc. So how do you view the whole segment? Yeah,
no, it's definitely a big relief, the mutual fund numbers that you just mentioned.
Yeah.
Because what we saw that as compared to the last month, when the non-SIP flows was almost zero,
yeah.
I think the non-SIP flows this time have gone up by, by almost like $500 million, so roughly like 4,000 crores. So that's definitely a big relief, I would say. And it's a very welcome relief also in the context of the fact that we are also seeing a huge equity supply as well. So we need the demand support, to come through. From the broader capital market standpoint, I believe that, the valuations have once again gone up and the stocks are, already pricing in, a lot of optimism. And so to that extent, I think the mutual fund data is a bit of a supporting factor. But given the fact that, due to some regulatory changes and some of the actions that we have seen, the probability is that it could have some negative impact on the industry volumes, which would probably be a negative for stock exchanges and some of the other sort of capital market plays. But within the capital market, like one segment, as I mentioned, that looks very, very attractive and interesting, is the investment banking side, because just to give you some numbers, like last month, the month of June, we saw almost $10 billion worth of equity raising. The month prior was $7 billion. And I think, this kind of, is setting a good stage for the whole of CY25 or FY26 to be like the record year in terms of fundraising, assuming that the market holds up. So assuming that the market holds up, we could very well see like $80 to $90 billion of total full year, maybe touching even 100 for all you know.
And this is a mix of IPOs, blocks, everything put together.
Yes, so it basically includes IPOs, it includes QIPs or follow-on offerings, it includes private equity blocks, it includes promoter blocks. And what we've seen is that the last two segments, which is the promoter and the private equity blocks, are now accounting for larger and larger share of the total, fundraising, which, as I said, is good for one segment of the capital marketplace. But for the overall market itself, it basically means that it will essentially cap the returns because the supply pressure is going to be immense.
I guess it also ties in with why you're expecting it to be more range-bound next couple of months, because there's so much supply also that's coming through. But very quickly, if we have 30 seconds time, your model portfolio, any major changes, additions, deletions?
Yeah, well, so obviously without getting into the stock-specific things, what we have done is we have made our portfolio more value conscious. So we have added some stocks where we see values that's across, that's basically across some of the new auto anchors that have got listed, some of the power utility companies where we actually beginning to see some value. And we have taken out some of the so-called expensive stocks so as to create some kind of a sort of insurance for the model portfolio.
Expensive from which sectors?
Yeah, so we have taken out some names from capital markets actually, the sector that you mentioned, and also some of the.
Reading a report, Nuvama has been removed from that model portfolio list.
And also some of the like auto names which we thought were more expensive, we are replacing with the slightly cheaper names.
Sure.
Okay, with that, it's completely out of time on this very, very interesting conversation. Mahesh, thank you so much for making the time and being with us. Very helpful insights coming in over there. With that, we take your leave in this week's edition of Editors Roundtable. We'll see you bright and early with the markets again on Monday morning.